Okay, so testing, 1, 2, 3. Let me try and sign that again. Very noisy voice. That means there's no sound, or the sound's poor. Sounds poor apparently. Hang on a second. Let me just sounds poor. Let's have a look at it. Is that got any better? Very noisy, says Mohsin. Raza, I'm very sorry, my friend. Let's. Should we try restarting this connection? Let's try restarting the connection. Is it still bad, guys? I've reconnected. Let's have a look. Okay, other people are saying it's fine. Saj is saying sounds okay. So perhaps perhaps I've reconnected. Right, let's. And other people saying they can hear me clearly as well. So, what was I saying? Three central banks have been out. I say probably the most interesting for me really is what the Bank of Japan were talking about. But as usual with these sessions, anything you want to talk about, please let us know. Amira, good morning to you. Hope you're well. And please check US 30. Yeah, let me just finish my little overview, Sage, and we'll look at the equity market. So it's all about the yield again. Yield is dominant. Let me just put me up here. So it's all about the yield at the moment. We'll come to the markets in a minute. The central banks are driving this, and so. With no change, this lower for longer policy continuing. So, as I said before, hopefully you can all hear me now. The 10-year yield has gone to 1.74 this morning, which is a 14-month high. More importantly, the longer-term yield, the 30-year yield, is at 2.5% for the US Treasury. So that's at a high not seen since August 2019. So this massive stimulus package is 1.9 trillion that's getting injected into the US economy. $1,400 per worker has already started to go out to people, and then following up with a big infrastructure project. So looking at possibly bigger than the 2 trillion for the stimulus package. So that's getting markets a bit spiky. So that's why we've got this bounce up in the yields, even though the Fed would potentially could have cooled it. They were still very dovish yesterday, and we still got this focus on the yield. And so the churn in the markets, we'll come to your USA 30 in a minute, Sarge, has preempted that, and that's why we see a weakness in the tech stocks and a rally in sort of a churn to the more stable. Or the industrial stock. Sorry, I'm just trying to find the USA 30. So this is a USA 30, Sarge. Sorry, let me just get rid of me a minute. There we go, down there, and there's a chart. So this is the USA 30, the Dow Industrials on the 1 hour time frame. So this morning we've been at 33,180, just shy of the R1 level here, the red line here. That's the daily level. And we're down now to test the pivot level. The pivot level sits at 32.95 and sort of sliding sideways. So I don't know what time frame you're interested in, Sarge, but can I add the template? A second. There we are. Right. So USA 30 sort of sliding down into this pivot area into open. Mark showed about a minute ago. This is the futures CFDs here around this 33,000. I've seen the big thick red line here. This is the key 33,000 level side. So we're down in this current hour, but it still remains very well bid. If you look at the daily time frame and zoom that, in fact, we zoom that out rather than in. There you can see the trend has been going up for months and months, as you're all well aware of, and a strong rally here in February and into March. So if we zoom that back in again for today, this is the daily time frame. Strong month for March, sideways here and up in February into close, and a strong start to March. So we're into the third week of March now, and we're up and banging into this 33,000 again. So on the daily time frame, it remains bid to the upside. We've had a big strong candle here. Remember, we talked about the candles yesterday at the webinar. Size matters again, guys. See how we engulfed this action here on the 5th of March, taking out the 2 previous days. Very positive candle, back over its 20-day moving average, bouncing off its 50-day moving average here on the 5th. And we've had 1, 2, 3, 4, 5, 6, 7, 8, 9. We're into our 9th day since the big candle, and we're still rallying, and the moving average is there nicely aligned. We've got the 20, the 9, and the 5, all nicely aligned, all moving up, but obviously finding some resistance at this psychological 3,300. So, Sarge, that's definitely a one to the upside, and it's still holding on. What's next for euro, dollar, bull or bear for the next few hours? Letito says, well, all the news is out today. We've had some very good, sorry, not very good, actually good. So, yeah, actually zoom this up. There we go. You're talking about the next few hours. Well, the trend, my friend, Lolito, for me is down. That would have gone short on this crossing strategy here this morning. 10 o'clock, and it's been lower ever since. So dollars picking up after the Fed. See how the Fed spiked the dollar lower yesterday. So euro went higher. We went into 119.86 highs early trading in the Asian session, 119.87 here, and then it's moved down ever since. So we've just had key data out of the US as well. We've had the weekly jobs numbers again. Remember last week we were talking about this 712,000. That was the low in November. It looked like we were heading towards. We looked like we were heading towards it last week. Well, it didn't happen. It bounced back up. We're at 725,000 for last week, and this week we've gone to 770,000. A big miss, 70,000 worse than expected. So 770,000 new claims. That's people applying for unemployment for the first time. So that's adding the weight on the recovery. The story of the US recovery being patchy, and that story is still continuing. So the rally against the dollar faded overnight, and it's been short since then. So that's moving there. Where are we? Where do we go from here? Well, that's support, 119.15. We're under the 200-hour moving average, that orange line there. And next support is clearly back at the big psychological 1900 itself. We ran through it yesterday ahead of the Fed. You can sort of discount a lot of the action yesterday and late on Tuesday ahead of the Fed. But if we zoom this in, so we had a big rally up, big rally down. So if we look at the sort of higher time, we've got the 4-hour time frame. We've moved up, but then back down since the Fed, basically. So we're moving back down. So the 119 becomes a key level. We break 119, and then the floor for 4-hour traders would take us down here to 118.65, that low from earlier in the week. And then the big 118.35 is the next level below that. Then that takes us back to the 8th of March. Over 10 trading days away, okay? So basically pressures to the downside, the trend is to the downside. The 1 hour's down, the 4 hours down, and the daily now is sort of consolidating between 119 and 120. But, big down day, big up day yesterday. It's the daily. Big up day yesterday, big down day today. So see how that finishes. But resistance at 120 at the end for end of day traders, and support sits at 119 end of day. The daily time low, that 1834 we just mentioned on the 1 hour. Okay. Good afternoon. Good day, Leroy. Hello, everyone. Hope you're well. Naruto. Within 2 weeks, the USA will crash badly. Danish. Lots. Yeah, don't speculate, Danish. That might be the case. We're a year virtually to the, well, not to the day, but to this week. Remember this week, last year, we were at these, the market was circuit breakers were cracking. The USA 30 was being stalled for paused for trading because it had moved 7%, and 13% was the next circuit breaker. So there was that big crash. There's lots of gossip that the second 2 weeks of March will be quite significantly negative, but that's just gossip. Trade what you see, not what necessarily you think. And what the market is telling us at the moment, here on the end of day basis, this is a daily basis, is we've rallied quite nicely. There's no reason to panic. If you're a end of day trader for the USA 30, Dinesh, no signal that that's going short at the moment. Very simple analysis, but there may be some reasons why you think that is the case. The weekly remains relatively positive. The last 3 weeks have been up, so you might expect a bit of a turnaround next week. Obviously, we're coming into the end of the quarter as well next week as well, so that's a key event as well over the next 10 days. So maybe some profit taking on this big rally up that we've had in the equity markets, but there's definitely obviously a rollover positivity for the USA 30 compared to the USA 100. It's the USA 100 on the daily time frame. See how it's bounced down all the way to 12,300 here at the beginning of March, and we've rallied again. We're sort of just about testing the 50-day moving average, but remain below the key 50-day moving average, and we have done for a long time, longest time in a while. The USA 100, the Nasdaq being under the 50-day moving average. So Nasdaq, big tech stocks, the Facebooks, the Amazons and what have you, 13,185 is where the 50-day moving average sits, and we need to move over that if that's going to start its next rally. And the all-time high up there, 13,920 for the USA 100. So we'll see where that happens. You depreciate around 13,150 in the next 2 days. Sage, maybe anything's possible, guys. Don't try and preempt things happening, though, chaps and ladies traders. See what happens. If your system, Sage, your strategy is telling you it's weakening, it's overbought, all those sort of good things. For putting a short position in place, obviously you take the trade. Here on the RSI, there are two simple indicators down here. The RSI set at 14 is approaching a technical overbought level, but look, it hasn't really been over this 70 level since this has gone all the way. This is the daily time frame going all the way back to October, so nothing to get too panicky about. It's flattening out here. This is the ATR, so the daily range is dipping as we're running out of steam, perhaps. But, we've had quite a good move up. You'd want to have a look at what the volume is doing on it. You might want to add volume, but at the moment, that remains okay. 33,000 is a key level. And as you say, 31,500. Where's your 31,500? Would take you around here, just around sort of the 50-day moving average level. So, yeah, it's a key support level. But before that, we got the 20-day moving average at 31,925. So just break of 32,000 was what you'd be watching. Interesting. Good afternoon, Sage. Can you instruct? Yep, of course it can. Anything's possible, Sage. Anything's possible. But at the moment, the trend remains to the upside. Thank you for joining us. There we go. Any questions, let us know. Stick it in the comment box. Somebody's put that on my behalf. Thank you very much. I guess it's my colleagues back in the office. Hope you're well. What's your thoughts on pound yen, Arnold? Yen, as I say, let's put this in position. The main sentiment driving the markets at the moment is this obsession with the yield curve. And the biggest news, as I said at the beginning, Arnold, for me, was the news that Nikkei broke that the actual announcement is going to be later on tonight about the possible widening of the envelope for from the Bank of Japan. So that concentration on yields means that the differential between the US and places like Europe and Japan potentially widening as you see the yields rising quite aggressively in the United States, particularly today post the Fed. So the impact on the yen is a sort of a weakening story. So if we go to let's start with I don't know what time frame you're talking about, RL, but again, another one. Don't wait till obviously the main news and noise is out. But that is an uptrend, isn't it? That's clearly an uptrend. We're going from left to right. We're going up, nicely supported by these moving averages, nicely in the channel of the Bollinger Band or whatever envelope you might be using, the top of the Bollinger Band there, middle Bollinger Band there, the 20-day moving average. We've been over the 20-day moving average, going off my chart here at the moment. But, so for 2021, the pound against the yen has been nicely trending higher, as sterling has against most currencies, because the uncertainty about the Brexit deal's been cleared. And in the last few weeks, last few months, Britain's getting a sentiment lift from the positive news that's coming out of the UK about the amount of vaccinations that are being done. They're sort of, one of the leading countries in the countries in the world for getting through the vaccinations. 47%. The BBC and ITV News were reporting the other night of the adult population, not the entire population, but the adult population of the UK has now had at least one vaccination. There's the ruckus around the AstraZeneca vaccine within the EU. There's obviously a bit of political overtones there as well. However, sterling, UK economy getting a lift from that. So sterling, dollar, pound against the yen to the upside. For me, I wouldn't start panicking until we've started to break this 20-day moving average here at 150. And even, using this strategy here, we haven't been under the yellow line here is the 9-period moving average. And we haven't been under that. We haven't closed, look at that. We haven't closed under the 9-period moving average still since the 15th of January. So Arnold, it's trending higher. So the daily's up, the 4-hour is sort of topping out a bit at 152.20 today. That's that R1 level, just bashing around, haven't dipped down. And the 1 hour today, sort of down, and then it was up yesterday. It's been up today. Quite volatile day today. It can be quite volatile, so be careful with the pound yen. Spreads are a bit wider than most of the major crosses. Excuse me. But it has a very high average true range, 260 pips. As we can see down here, this number here, it's ATR 262617, so over 260 pips. So volatile. Sorry, it's the hour time frame. What we're talking about, 26 pips there. So big old moves for the pound yen today. So it's chopping around. That's not doing anything for me. That's still supported to the upside. So generally it's up, but it's been very volatile today. Arnold, it's probably why you're asking, isn't it? So clear resistance at R1 this morning at 152.50, and then R1 now at 152.20 is the resistance going in for the close of the day, and the pivot point might be pulling us down to 151.76, but it's a big down hour at the moment, and we're 15 minutes to go, so that has broken back under that. But each time it's done that today, it's moved back up, hasn't it? So see if we get to the pivot point. Lots of volatility. And it's chopping around. A lot of that is back of the news from the Bank of Japan and obviously the Bank of England as well, which talked about a better second half to 2021, but not a great deal of change. This kicked into woods again, this negative interest rate story. I say, they talked about an uncertain outlook prevailing. So Bank of England and Bank of Japan both in the news today, hence the volatility we've had today for this particular pair. But we're now airing to the downside, the yen with a bit of a lift on potential a widening of the yield envelope. So I hope that answered your question. Pound cable. It's been again a weakening post. Obviously, it rallied after the Fed, and now it's weakened after the Bank of England. Sarah. So 140 couldn't get there today. We spiked it into hours a couple of times, but we moved initially up on the Bank of England announcement. Then we ticked down around this 139.45, and since then, we've moved down. Big support, obviously 139 today, Usman. That's where the 200-hour sits as well. But again, you see the impact of how significant the central banks can be. So we're sort of airing into this 139 level. If we go up to the daily time frame, okay, obviously it was the Fed yesterday, the Bank of England today. The daily for yesterday is complete. We can't make a decision on today because it's still forming, but we've still got a significant resistance, as you can see there, for all of March at 140, but also equally quite a significant support at 139 this week or so. So if this 139.0 level breaks, it could then be, there's not much. There's a lot of fresh air as we went up to 140 from 139, that 200 pip move. There's a lot of fresh air under here down to 138 as well. So on the daily time frame, there's those three big round numbers: 140, 139, and 138. Usman, if you want a tighter time frame, let me know because there's lots of questions coming in here. Raj, good afternoon to you, sir. How are you doing? Hope you're well, staying safe. What's your thoughts on gold, silver, palladium? I haven't looked at palladium for ages, Ababoth, but gold was weak. There's chatter that silver is looking to break out or looking to move higher. The Chinese industrial date news, that's the real key driver for some of the silver prices. Obviously, apart from that spike we had from the Reddit characters here back in at the end of January when we went to $30. But silver here on the daily time frame. What's your name? Abel Lads. We're sort of sliding sideways, not really doing very much. So, but longer things go sideways, the bigger the move can be. So, not a great deal of action as far as a trend following trader would be considered. He's been short. This is the daily on the silver market. Let's bring him. It's been short and under its 20-day moving average all of March, basically 26th of February. There, it went below the 20-day moving average, and it's been below it ever since. We're sort of back, and we're pivoting through. Not one I can get too excited about, to be honest, Abbas. But watch the channel. The channel could break. So the 20 days come down here. So a break over 2640, 2650 is where R1 sits today. Break over that level and a close on the daily time frame would be bullish. But a break under this S1 level where we've been for over a week and a bit would be negative at 125.85 or 125.80. 25.80 is your support. And then the test could be the March low this week or next week, which takes us to 24.85. So waiting, basically. I can't say a great deal on that. So we've had 1, 2, 3, 4, 5, 6, 7 days sideways action. Put your resistance in, put your support in, and wait for a break at the end of day, my friend. As far as gold's concerned, gold on the daily time frame. Remember, last week we plummeted down to this 1685. This is a key big support on the weekly time frames. We've moved up there. We tested yesterday the 20-day moving average for the first time in a long time, for the first time for well over a month, the beginning of February, and then we weakened under it. Having broken it here at the beginning of January. So gold has really been weak for most of 2021, having touched this big weekly support at 1685. The move up is slower and more protracted than the retraces we've had in January and February. And we did peak over the 20-day moving average, but it still remains relatively weak, and we're down again today. Trend remains lower. The highs are getting lower. The lows continue to get lower. So 1,700 remains a big line in the sand for gold traders, and then at that key, $15 below that at 1685. Weekday today, 4 hour rolled over from yesterday's high at 1755. We're down again. That 1717 area from earlier in the month is key. Intraday, one day. The 1 hour traders, big rally as the dollar weakened initially on the Fed into that 1755 resistance, and then an equally powerful short position this morning, 9 till 10 candle, and we've been short ever since. And it's trending nicely under S1, under the 200 hour, and continuing to plummet at 1721. Gold going down. As for palladium, I've got palladium. I didn't think I had. Palladium's had a stonking. We're talking about wait for channel to break out, but what a stonking few days that palladium has had. Through this sort of resistance area, immediate resistance was there at 2425, and then the one above that was here. From this takes it back to November and December highs at 2495, but a very, very strong breakout. So if we zoom in, it looks really aggressive, and indeed it is. So the bigger you see, the longer we go sideways. So we were up and down, channel trading, oscillator trading. The highs were the lows were getting higher. We were supported by the 200-day moving average here. We got up here. You could argue that the lows were the highs were sort of getting lower. Let me just put that in for you there. So that sort of downward trending line was tested, didn't get to it, tested down. It looked like that channel down was working, but it wasn't. It was compressing. See how the 200-day was rising. The lows were getting, the highs were sort of trending down, so it's compressing, and then we burst out. So that is a breakout. Obviously, the question is, where do we go from here? Well, that's a very strong breakout this week for Palladium. Again, there'll be some technical fundamental reasons which escape me at the moment, but as far as the weekly time frame, look how strong that weekly candle is. So again, you see the big breakout. Obviously, we're past these highs, which takes us back to February last year. So the spike yesterday. So from here going forward was obviously that high there when we went to 2871. So that's your next line in the sand. We're at 2695 at the moment. So 27 is the next round number to breach, which is just above there. We probably may have been there already. And that's another extension. That's a Fibonacci 324. You don't see that very often. Fibonacci extension on this low down here of 20 from 2019, but I should take that off now. But that's coinciding with that 27 level on the higher time frame chart. So big break. Again, following the rules, you would have entered a sort of tentative long there. You would have certainly, the interesting one for me if we've been trading Palladium would have been this big candle here, the 1, 2, 3, 4, fifth consecutive day high, a bigger candle following through. Again, as we were all, if you were at the webinar yesterday, guys, we talked about candle size matters, and that's a great example of why big candles are very significant and can be very significant. So big breakout on the 16th. That was Monday, wasn't it? No, Tuesday. Wednesday followed through. Big gap on open again. A gap on open this morning. So 2700 next line in the sand for Palladium. So Palladium bullish, silver going sideways, gold going down. What a mixture for the commodities, Abbas. Raja, I always find it more safer as a buyer trade compared to sell trades these days. Who do you agree? Selling is tricky. It's a mental thing, Raja. Remember, if you are thinking that, let me just pull this up because there's a general question. I put my ugly mug up there. If you are thinking that, Raja, that will be self-fulfilling. So every time now you take a short trade or you try to sell, you'll be thinking, I can't do this, or I'm keep losing. Don't fall into that trap. Remember, markets go up, they go down, they go sideways. But if you're finding in your analysis, what your trading journal is telling you, that you're doing better buying than selling, well, have a think about that before you open another sell trade. It might be either a psychological thing that's not true, if you've analysed your data, but it may be true. It may be something you think is true, one of these urban myths. But if your data is showing you're better at buying, well, have a think about that. Only look to prioritise your long trades rather than your short trades. It's all about you guys. That's always my mantra. There are billions of traders out there, and a trade only exists when one guy thinks something's going to go up, another guy thinks it's going to go down. The broker puts the two together, offers a price that they both agree with. One thinks the price is going to go down from where he's caught in. The other trader, I'm saying guy, they could be a lady, obviously, thinks the thing's going to go up, and that's what markets are. They go up, they go down, they go sideways. So have a think about that, my friend. But best of luck, whatever you decide to do. Raja, long live buy. Okay, well, whatever it is you're buying, that's good. Could you please comment on the pound against the dollar and the euro against the dollar? Says Haydix. Good morning to you, sir. I don't know where you are because you're in the Caribbean somewhere. If it's good morning, or somewhere in Latin America or somewhere. Pound has weakened today after the Bank of England cable. Here we talked about this a minute ago, but here on the daily time frame. Index, we're really in a bit of a sideways channel. 140 is the resistance. 139 is our support this week and has been for a few days. But the bigger support in March is 138. So those three big round numbers, 200 pips between them. So it's a huge move to watch. So as far as today's concerned, cable has been positive, testing 140 earlier. But the Bank of England announcement, it was expected to be a bit more hawkish, and it was actually more on the dovish side, to be honest. So it was quite negative. And so we pivoted around 139.45 before we've fallen 40, 50 pips into the key support today at 139. So if 139, that big end of day support I've mentioned breaks. Next support today is there, 138.85 to the downside intraday, and then yesterday's low would be the next one to test, which took you down to 138.50, or just under 138.50 at 138.48 to the downside ADX. As far as euro is concerned today, this is a daily again. So again, another one that's pivoting between two key round numbers. The 120 level, we haven't been over since early March, but we haven't been under 119 since the 9th of March. So again, another big 100 pip range down the end of day charts. We had a big positive day yesterday, thanks to the Fed spiking the dollar a wee bit, but we ran out of steam at 119.85, and then euro dollar has been short since 10 o'clock this morning on the 1 hour time frame, and has support at S1, which we've been under already at 119.15, having gone short at 119.46. So there's 30 pips in there to the downside in those 1 hour time frames, and that trend continues to move to the downside. No problem. It's my friend. Gold, we just looked at gold a minute, Shahid, but as I say, depending on the time frames, but as I said, the gold today has been weak, a bit like the euro chart we just looked at, as the dollar strengthened and then weakened. Weakened and then strengthened here as far as the gold is concerned. So another one that's been short since 10 o'clock this morning on the 1 hour time frame. Under S1 at 17.30, and we're $7 below that now at 17.23. S2 today sits 17.17 was a key support area on the daily time, so watch that one as well before then. But S2 is at 17.12, so we've breached the 200 hour and the S1 level here at 17. Well, it's actually below 17.30. It's at 17.28. So again, another one that's trending to the downside today. Abu Bakr, hello, my friend. What about Bloom, the Bloom index? You're talking about the dollar index. You mean the Bloom? Yeah, I haven't got the Bloomberg index here, but the dollar index, which is the Bloomberg index, is a wider measure of the dollar itself. But the US index, the main Dixie, which is it's a very narrow weighted index. There's only 6 currencies in there, and the euro is the biggest and most influential of that. So it's following the euro session. So the dollar fell from 92 yesterday post-Fed into 91.35, a key level we've had marked before. Back over 91.50 this morning as the dollar got a bit of a bid, and the dollar bid has continued. So again, big move down there, big move up, and that would have triggered long just in the last few hours at 2 o'clock server time. So 2 hours ago, dollar index went long here at 91.62. And we're now testing 91.86, so quite a nice move there. So that's the 200-hour moving average there. See how it's, the power of the central banks, Fed, bang, Fed. Actually, was it that bad? And the dollar's back up. So 92 is the next big resistance you can see here. That's nice. This is the hourly chart for the dollar index. We haven't been over 92 this week. Key resistance above that 200-hour moving average. Abu Bakr. No fatigue. I love your handle, my friend. The Fed clearly stated that they don't plan on increasing rates anytime soon. I reiterated the fact that they're going to let inflation surpass absolutely 2.5%. So why is the 10-year yield at 1.7 this morning? Well, just because the Fed said what they're going to do, markets make their own mind up. Remember, they're two different entities, and they're both taking information from each other. Sometimes the Fed's right, sometimes the market's right. But, traders trade the market. So you've got to see what the market is saying. And, markets have a history of overreacting to events. So they tend to go too low. Some would argue, this is a good example here on the dollar index, too low as an immediate reaction, but also too high. So, there we go. The yield curve, no fatigue, has been a focus for a while now. Okay, it's not just something that reacted to yesterday. Obviously, the trend has been going higher. This 174 high we got today on the 10-year. It's going up, but it's been trending up for a while now. The expectation is that's the reason the yield has gone up, is the fact that some are expecting the inflation to be more than just a spike. The Fed have said, "Oh, we want it over 2%. We're expecting it to spike to 2%, 2.5%. We're not going to move rates, like you said." The dot plot was talking about a possible rate rise right at the end of 2022 in December. That seems to have disappeared now into 2023 anytime soon, like you say. But the market is not necessarily agreeing with the Fed again. So the pressure of a taper tantrum has disappeared for now. Markets do what markets do. Don't try and read too much into it. React to what your chart is telling you, what your system is telling you, to the fundamental news. Okay, so take it that way, my friend. But thanks for the question. Very interesting indeed. Well informed trader. Raja, don't let your emotions, hate is a very strong word, okay? Very powerful word. And if you say it out loud or you write it down, you're reinforcing your subconscious all the time. So don't mean that you can't ever put a sell trade on. Is that because you've had a few losing sell trades? The market, you can make money both ways. You obviously lose money both ways, but just by ruling out never taking a sell trade anymore means you're perhaps running out of discounting 50% of your options. So be careful with the words you use, and you use yourself. Okay. We just talked about the USD index. Usman says, "Thank you. Sorry, I'm. What time is it? I'm 6. These questions are 16 minutes old, so I'm sorry. Right. Next one is dollar yen for Nazaruddin. Again, very volatile, as you might expect over the last couple of trading sessions. But ignore like today and yesterday, we've had the Fed and then the Bank of Japan. But what's happening? Well, we can't, that line there, that 109.20 that we rallied to earlier in the week. That's our resistance this week, isn't it? So this was Monday. Friday, we'd rallied really quite strongly from this low under 108.50. So strong rally on Friday into the close of the week. Monday, we moved and breached this 109.20 level. Tuesday, we tested it. We ran down from it Tuesday. Wednesday, we moved back up again, but then there was the negativity for the dollar as the Fed announced. We ran into the 200-hour down here at 108.66. Interesting again. Not as low as the 108.50 level from Friday. But to the upside. So this 70 pip gap here for dollar yen is the key range I'd be looking at, and that's where we've been all week. So the pressure, you could argue, is to the upside. So we're pushing higher again. So 109.10 now. So 109 is a key level. 4-hour traders, there you go. You see that 109.20 level from last week, and then this week as well. So we need to break 109.20 to take this high. Take us to 109.50 and breaking out that Bollinger Band for 4-hour traders. The end of day traders are still long and quite comfortable. They've been long. It's been over this 20-day moving average. Again, dollar surprising everybody at the start of the year. It's expected to weaken, but here we are, over the 20-day moving average, and it first broke that all the way back there on the 7th of January, and it's been long ever since. A bit of rise, retrace, nice rally. So highs getting higher. We're flattening out a wee bit now. So 109.20 key level to break us up and move us forward, Rudin. On the daily, if you want, again, guys, put your time frames on if you want to look at more specifics. Kizito, gold is trying to clear my account. Kizito, always trade. Again, I can't tell you what to do. I'm not allowed to, but if you have a stop loss, if you have to take profit, it gets you out of the market. It gets you out of the market when you at the target you're predicting. It gets you out of the market at your stop loss where you're comfortable with taking a loss. You've got to be comfortable with taking a loss, because in trading, it happens a lot. And one of the biggest problems most traders have is they can't accept losing. If you want to move forward in this business, you've got to accept you lose a lot of trades. But keep the losses small, and you live to fight another day. Let the trades get the losses too big, and it's difficult. Or it can be difficult. Amira, I lost contact. Did you review Bitcoin and gold already? I've talked about gold, but I'm happy to do it again. Bitcoin, we haven't talked about it at all today. Nobody's asked about Bitcoin today, but the cryptos remain relatively well bid. We had a bit of a weakness. This is the 1 hour time frame with that big 60,000 we broke over the weekend. Now we've been down from there, but lots of volatility remains in the crypto market. Obviously, Bitcoin, the biggest of them all, and well supported. So this is the 1 hour time frame. As you can see, the big 200-hour moving average was tested here on Tuesday, tested again yesterday. It's held Tuesday, rallied, held yesterday, rallied, and the highs have got higher since then. We went to 59,300 earlier this morning, and we're drifting down now into 58,000 so far. We're pivoting through 58,000. So here on this 1 hour crossing exponential moving average strategy here, that would have taken you short into 59,000. A very weak short because the stocks are already down. This is MFI down here is already down. RSI was falling, so short that hasn't really played out. Pivot point today is at 57,000, so another big round number, Amira. 58,000 seems to hold at the moment, but anything can happen with Bitcoin on it. And obviously then the resistance from earlier in the week at 60,000, which is where R1 is today. So that's drifting lower today, but doesn't seem to want to go below much than that at the moment, but anything could happen with the Bitcoin. 4 hour, a bit more positive. It's over. It's sort of gone sideways for most of the week over the 20 period moving average there at 56,500. 58 a key resistance, which we're back into now, but it needs to break. That's still long from this move up here over 58,000 earlier in the week, but 60,000 a new line in the sand for the daily and the 4 hour traders. And gold, Amira, remains weak. Week from 10 o'clock this morning. We've been down for 1, 2, 3, 4, 5, 6, 7 hours since then. Under S1 and the 200. So to move back up gold, which is a lot, it needs to break back over 1730, that 200-hour moving average, and the S1 today. S2 sits a bit lower at 1712, but the key line, I've got this in here at 1717 from the daily. I think it's from a daily time frame. I can't remember why it's in there, but it's in there for a reason. Yeah, that was the support earlier in support and resistance earlier in the month. So it's found support there today. It seems to be. There we go. It's just a bit there. It hasn't got to that yet, but it seems to be bouncing up. But we have been down for 1, 2, 3, 4, 5, 6, 7, 8. 8 of the last 8 hours we've been down of 7 of them, so it's not unusual to expect a bit of a retrace here. But we need to break back over this 200 period here at 1728 to move back to the upside. Oops. Who's next? Christelle's just saying good day. Sorry, I don't see these till come in. Good afternoon, everyone. Hope you're well. Salam. Kazil. Ravi, good morning. Good morning. Oh, Trinidad. You're in Trinidad. Good morning, Ravi. Hope you're well and you're staying safe. Raja, have a good day, buddy. Time to look for some buy entries if I can take it. Absolutely. Raja, my friend, don't go looking for them. Wait till they come to your system, okay? Don't make them happen. Don't think they're there. I don't know what time frame you're trading, but wait till they pop up and you react to the action. I'm beginning to need support from you people. I want to be a professional forex trader. I'm hearing you loud and clear. Thank you, Mohammed. Just stay with us. Watch the webinars. Watch these live events. Read our ebooks. Watch the videos that are on our education portal. So start there. Any questions, please ask, either at these sessions or any of our other live events, or send us an email at webinars@hotforex.com. That's probably the best, quickest way to get hold of any of us. Webinars, WEBINARS @hotforex.com. Any questions, we'll get back to you there. No fatigue. Thanks for your response. The pound Swiss is overbought on the weekly, but the bull trend seems to be well intact. Do you think it's a good idea to look at entry, or should I wait for a 50 to 60% retest? Again, no fatigue. It depends on your time frame. If you're a weekly trader, you obviously got to wait till Friday or wait till the weekend to see what's happening. But I don't know if I've got pound Swissy here. Let's have a look. Don't you have? Let's just go to the pound chart. As we said before, sterling's been relatively bid for all of 2021 because of the uncertainties of Brexit disappearing. The Swissy has benefited from the safe haven status, but it's weakening along with the yen. We've had talk of the Swiss National Bank again intervening with a Swiss franc that's too strong, so it's affecting their markets. So where am I found? Where's my sterling trade? British pound. So look, so Swissy. So again, just looking at daily, that's long. Okay, it's long. It's 129.20 is a key sort of resistance this week and beyond. We got the pivot. Look at these 3 pivot highs up here. Oh, you can see that. No fatigue. 3 pivot highs at the big, the big psychological 130.00. So it's perhaps stalling or run out of steam at 129.50. As you said, the weekly. Yeah, strong weekly chart. It's broken out. Another classic, breakout. Look at that. Over there, again, the pivot highs, sideways for all this time. So sideways, we couldn't break 122, taking us all the way back to March last year. So it's a weekly time frame. And now we've broken out over the 50 period. In fact, as a weekly trader, that was your first indication here back at the middle of December. We're over the 20 period moving average and the 50 period moving average in the same week. We dipped under it into close of the year, but then what a strong year pound against the Swiss franc has had. And here we are, 129.50. That's a bit of resistance area. But as you can see, if we look to the left again, always look to the left, see what's happened in the past for potential upside. It takes us back there to December 2019, which takes us to 131 plus 131 100, and that, and above that was that inter-month spike there to 133. So again, the pressures to the upside. Will it retrace? Well, it might do, but the support, here on the weekly time frame is that key 200 week moving average, which sits all the way down there at 126.30. That trend, you can't say it's over till it's turned down till it's over, and it isn't, because they're all white candles. We've had consecutive positive weeks, so the trend is going up. It's just about overbought. 75 isn't that high for RSI, so I would just look at the MACD, nice and strong. RSI stochastics more volatile than RSI, but still in the overbought area, but not exacerbated either. Or stretched too much at 90. It's pretty high, obviously, but continuing to move up. So that's still long, my friend. Whatever your system, whatever your strategy is saying. But if I was an end of week trader for the pound Swiss, that just remains long. And interestingly, we've stalled at 129.50 at the moment. Christella, I'm using this forex traders. A word of advice, please. I keep losing. Christella, if you watch my webinar, the webinar that we do on mindset, okay, because this business is predominantly a psychological business, and losing is part of the business, I'm afraid. What you have to do, or the key to this, is keeping your losing trade small. So when you lose a very, very small percentage of your account. So regardless of your account size, when you lose, make it a small amount. Don't make it a fixed pip amount. Don't make it a fixed dollar amount unless that's a percentage of your account. Think in percentages rather in dollars. So get to the website, get to the education portal. There's lots of videos on there. Make sure you understand the basics of leverage and margin and spread, and what a pip is on different assets, and how different products have different margin requirements. So make sure you understand everything of the basics before you risk any of your real money, okay? And obviously do come to our webinars and keep learning and keep asking questions. As I said before, email me at webinars@hotforex.com if you want some more information. I just spoke to you. I'm like, no fatigue. No, hang on a minute. I'm going backwards now. Sorry, guys. Because gold is making my head hurt. Amira, gold makes lots of people's heads hurt. Remember, when you're trading gold, guys, 1 cent is 1 pip. So, a dollar move work out the pip move. So be careful, as with everything. Watch the spread, and obviously, gold can be particularly volatile on particular days, and then very, very quiet other days. So watch that. But remember, it's obviously correlated against the dollar. Dollar's better off today. Do you think Bitcoin will reach another all-time high before a retracement? Who knows, Anwar? But the market is bid. We had this new all-time high over 60,000 earlier in the week, or over the weekend. Where are we going? Where am I going to? I'm going to this one. Who knows? Have we turned around from the 60,000 again? Who knows? It's bid again, depending on the time frame you're trading. Might have different things here. 4 hours sort of struggled to the new all-time high. We came back down, but sort of been sideways for most of the week, hasn't it? We've had support around 54,000. Obviously, that all-time high at 60,000. So it's a big variance. $6,000, huge move. Daily time frame. Now let's have a look at the daily time frame. That is still high. That's still not high, but sorry, that is still bid. The 20-day moving average, one of the key indicators. We've been over that now for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, our 11th day. So it's still rising to the upside. First sign of the weakness will be a break under one of these moving averages for me. The 5 is still strong. The key close of the long would be a break of the 9 period here, and that sits at 57,000. So watch 57,000, Anwar, going forward. Nicholas. Hello, Nicholas. How are you? You're very well, you say. Right, questions have suddenly dried up. So have I lost the connection, or we just ran out of questions? We might have just run out of questions. I've bored you silly. So let's have a look. Let's just recap of where we are. So a very busy 2 trading days. Fundamentally, we've had 3 of the biggest central banks in the world. The biggest one being the Fed, which big announcement yesterday. The dollar initially weakened, I should say. Euro here, as an example, went to 119.87. Couldn't get to the key 120 level, and then it's cooled in the Asian session a tad, and then again this morning during the European session, it's cooled. The dollar's gained. The euro dollar has cooled, but the dollar's picked up during the European session and into the open of the US session. Currently finding support at 119.15, which is S1 today. But the big support sits 15 pips below that at 119 itself, which we really sort of pivoted through in anticipation and waiting for the Fed news. So continue to talk about accommodative policy. Remember, the geopolitics is starting to raise their heads as well again now in things. It cooled a bit in the run-up to the US election, but now President Biden has got the stimulus package, the 1.9 trillion behind him. They're now talking about an infrastructure package, which will be close to 2 trillion as well. Lots of people are kicking around. The Democrats can push this through, so the story, the relationship with China is starting to raise its head again. Obviously, the Iranian situation is back on the agenda, so the green revolution, the new Biden administration has promised, has helped a lot of these green stocks and put pressure on the oil market. But again, with the view of rising inflation and this focus on yields that the market has at the moment, it's a weaker dollar story again. But that hasn't is sort of not playing out today, at least. Anyway, the dollar's up a tad into the US Open. So let's have a quick check of how the markets actually opened this afternoon. Equity market size. They're a bit mixed. Dow up marginally. Again, the Nasdaq lagging. As that's a trend that we've been seeing. As the market, the equity traders churn out of the tech stocks, which are particularly vulnerable to high yields, and yields have spiked today. to the more traditional, banks and infrastructure companies and energy companies and stocks and things like that. So the Dow, as we talked about right at the beginning of the session, is relatively up. There we go. That's a daily up and testing this 33,000 today. We're sort of still holding 33,000, and USA 500 is down today from 3,987 yesterday, and the where's the USA 100? Where's it gone? I've lost it. The tech stocks are down a tad. So there we go. Thank you for your time, everyone. Any final questions before I go? Mohammed's sending me lots of questions. I don't know whether you're clapping me or clapping somebody else. But there we go. Take care, everyone. Stay safe, and we'll see you all again next time. May the pips be with you, and trade and test carefully. All the best, everyone. Bye-bye.